What's up, everybody? Welcome back to the channel. So I just wanted to bring up, it's Sunday night. I took some profits yesterday. I actually sold some of my index funds because we had that monster run up. So I made a nice little 400 bucks, which was nice. But I just don't trust where the market is going right now. And it's okay because I can always buy back in higher if I believe that it's going to continue to run. And the reason I'm saying this is because if you look at the yearly chart, just take a quick look. This looks really nice. This is on the 1 day. It's trending above the 200 EMA. But if you go on the 1 year chart, this is the SPY S&P 500 we're looking at. Every time it's retested, if it's broken it, it's come back down right now. It's been bearish. But right now, this green line is your 200 EMA, and it is finally broken past it, which is around like your 440 range. But I want to see that it can actually hold this on the 1 year chart. And then I'll be a believer and I'll actually buy and hold and try to make some good gains. But the big thing that scares me is look at the volume of these candles. And you don't need to get into specifics, but just look at the size of them. How when it was trending up, it was trending up nicely. Look how small these volume are, because this means that the bars, there's less volatility. So it's just coming up, less volatility. But notice in this area, where we had these monster drops and monster pull-ups, we have monster volatility. These bars are about double to triple the size. So for me, that just shows me that we really don't know where the market's going to go. And I want to see a nice consistent size in the volatility just with the bars alone. Plus, I want to see this area hold above SPY 440. I want to see it hold above this 200 EMA that's highlighted in green. So for me, I decided to sell, take my profits. I'm almost up to 12,000 on the year, which is good. But I want to be safe. I don't want to buy up here and hold like everybody else was, because just in 1 day, look at the RSI. It's 65. It's at the tippy top. It doesn't mean it has to sell off, but it could sell off. And I just don't want to have shares to really take that chance. I can always jump back in. No big deal. But I think it's definitely important to always kind of keep that in mind. And let's look at the similar thing. Look at QQQ, which is the NASDAQ. Look at this monster run. I mean, in 1 day, let's go 5 days. In 5 days, it went up from 316, 317, all the way up to 352. And we still have all the issues that are going on. I just think it's important just to kind of put things into perspective and just be cautious. Let the market prove to you that it's going to return. Let it prove that it's going to hold. 200 EMA is a critical point. The NASDAQ is approaching it, 357. If the NASDAQ breaks 357 tomorrow or even this week, and it can hold this level, then I'll buy higher, because we have plenty of room. If you think about the return on investment, even if we bought at 365 and we can ride it back up to 400, it's a great percentage gain. So I'm not in any rush. I just want the market to prove to me that it's actually going to hold. And same thing, when it was climbing up over the last year, look how small the bars were of volume. Nice volatility. When you have high volatility with these massive sell-offs, look how big these bars are. They're triple the size. Just a lot going on. I like to go by the RSI. It's super low here, and it blasted up. Now in the market, it's up here. The RSI is like 55, 70. It's just too much. I want to give it some time. Let's see where it goes. And then I'll buy back into the S&P 500. I'll buy back into the QQQ. Let it prove to you. The only fund I'm still holding is FDRV, because that's my electric vehicle ETF that I'm holding long term. I want to see where it goes 20 years from now. But yeah, I'm sitting in a lot of cash right now because I just want to be careful. I don't want to overextend myself. I don't want to buy up here where I'm not sure if it's holding. It's got to prove to me that it holds its 200 EMA. I think it's important to look at that, especially as investors, because when you look just even at just the NASDAQ and you look at the last business day, how it just went up like 12 points in 1 day, you think, oh, I missed out. And then you buy up here, and then on Monday, Tuesday, or Wednesday, bad news comes out and it comes back down to 345, and you're sitting there not sure what you should be doing. So I just want to bring it out there. I think it's good to just keep an eye out. If you're day trading or swing trading, you want to buy in the red. You want to buy the red days, not the green days, because you have a better chance of making money if you buy the red versus buying the green, because look how high it is now. So where am I going to be looking to make a re-entry? First, I want to see if it holds that 200 EMA. For the NASDAQ, it's like 357, so it still has some room to grow. But around this 340 area, I'll start nibbling again. But we have to be careful because it can go right back down to 316. So just be careful, watch the charts, watch your RSI. I mean, look where it is. It's 81, 81 on the RSI right now. Look at every single time that the RSI was this high. So right here, I'm not even looking at the chart yet. I'm just looking up, bringing up the arrow. It was up here at 337, sold down. Let's look right here. It was, 70 and it sold back down. You don't want to be a buyer when it's 81 on the RSI. To me, this seems like a no-brainer, like it's going to sell off. So we'll see what happens. I could be wrong, and I hope I'm wrong, because if I'm wrong, that's even better. That means that I can actually buy, and I will just buy it higher because the market is proving that it's going to hold if it holds above 357. So give it some time. It's okay to miss out on some green. I made some money. I didn't make as much as I wanted to, but that's okay. You can always get back in if you have the cash. The only problem is if you're buying high and you don't have the cash because you're bag holding. And that's what I try to avoid. And it's okay if you're bag holding in a retirement account or something, or you're just thinking long term, then it doesn't matter. You're thinking it sold off from 400 down to 350. But the way I trade, I feel much more comfortable buying on the red days, not on the green days. I like to sell on my green days and take profits. And if it goes up without me, that's okay, because I had the trade already in mind and what I wanted to do with it. So always follow that stop loss, protect your investments, and just be mindful of where we're actually at in reality, because just because the market goes up 20, 30 points in one day, it can do the same exact thing coming down. Because look at this, it went down from, the SPY went down from 475 down to 420. You don't want to be holders up here and then it just sells off. And this is what could potentially happen here, because if I still had shares in the 420, 430 range, you bet I'm selling, taking profits up here. Why not? Something to think about. If you're holding long-term 30 years, then it doesn't matter, just dollar cost average. But if you're trying to make swing trade gains or day trading gains, I think it's good to look at the overall picture and see what we're actually looking at. So even when you look at the 5-year chart on the 5-year, I mean, you can still have massive drops. I mean, look at this. This is a couple of years ago. A couple of years, yeah. Wow, this is this is COVID time where it went from 300 down to 200. So you want to have some ammo just in case this thing continues to sell off. It hasn't proven itself yet. It's got to hold this EMA line. So the SPY has to hold 438. If it can hold the 440 range, then okay, we're in business. We can buy and believe we're going bullish. And as long as it's bouncing off this EMA line like it's done in the past, then we'll be okay. But let it prove to you. That's just my advice. Take it or leave it. That's how I'm treating the market right now, and I don't want to do anything that would be too risky. The only thing that I'm holding, like I said before, is this fund, because I just have it's my own hunch that 10 years from now there's going to be a lot more electric vehicles on the road, and electric vehicles FDRV is what I want to hold. So I have a nice 10K position. I believe it's like average of 24 or 24.50 is my price for it, but that's like my cost basis. But I'm okay holding it there because I don't have it in the 30s and I'm holding it in the mid 20s, so that's fine with me. And I'll continue to dollar cost average as I make more money day trading. When you look at the overall chart on it, it doesn't look good. It looks bearish, let's be honest. But I'm going to hold it. I'm going to add to it because it's just a belief I have and I want to see where it goes. I'm trying to bring up a good chart on this, but it's not looking good. Hold on. All right. Oh, there we go. And that's all I really wanted to show you. I think the SPY, that what I'm actually interested in is the SQQQ, this is very risky. This is triple leverage. This is, you're betting that the market's going to go short. So on Monday, I'm going to buy just 100 shares just to hold. So it'll cost like 3,700 because I think that the market's going to pull back, and I'm going to buy the dip when it dips. But when you look at SQQ, it's not a good representation because it used to be much more because they had to do the ratio where they change the prices. But look at this RSI. It's 42. It's completely selling under the EMA line. And this is the opposite of the NASDAQ, so it's going to look the exact opposite. But once it starts pulling away from these lines, what does it like to do? It likes to retest the EMAs, which my orange is my 20, my red is my 9, and the EMA is my 200, the green one, I'm sorry. So every time it does that, it likes to come back and correct it. So I'm going to probably buy 100 shares of it tomorrow. Hopefully it's still down in this range. And we'll see if we can resell it back at $40 and try to make like 300-400 off just of 100 shares. But that's what I wanted to bring up to you. Just be cautious, protect your money. Always just follow your stop losses, because when you're looking at some of these companies, they're all like had a massive run up. But you just want to be careful and just make sure that you're protecting yourself at all times, because you don't really know where the stocks are going to go, and they can go down if they want to. And let's just see. I want to bring up Tesla real quick, because Tesla. Yeah, like look at Apple right now. It was trading below, it was at 150 and it blasted up to 165 in 10 days. I mean, come on. And let's just see if I can bring up the, there you go. In the one day, it went up 160, 165, so 5 points. So that's a great day, whoever had them. And then looking at Tesla, here it is. Tesla, I mean, look at these gains, 860 up to 907. But just go like, look at 10 days, look at the bigger picture. It was trading at 750. So if you're going to buy now at 900 when you could have bought at 750, just be careful and protect your investments. Look for at least maybe some sell-off. See if it's confirming that it's holding the 200 EMA. And that's where I'm looking at when I buy these things. Tesla's too expensive for me. I don't want to spend $900 a share. So I'd rather buy like QQQ or TQQ or SQQ. But that's where I'm looking at. I'm watching the SPY, watching QQQ, seeing if they're holding those levels. And I think it's important to keep that in mind when you're day trading.